participants. We see a very low count for the moment. I'm given to understand we have some 50 to 60 registrants, hopefully to join them on time. Uh, I'm not, nonetheless, I don't venture or intend to get into the topic by any chance, but indeed, this is personally for me a proud and very happy moment. Indeed, happy for the reason that this is my first webinar after I have taken over, and more so happy because my guru of guru, whom I consider Guru sir, is here. In spite of being a very small event or a program, that I've requested him for a personal presence, at least by virtually, even if for 5 to 10 minutes, an address of this is going to be a big blessing for all of us, I consider, sir. Apart from that, indeed very proud because Amaljith, it is also a first CPE for him. So probably on different scales, but both of us share the same privilege of me having my first webinar and of Amaljith, having to take his first CPE. No, it is indeed a great moment, a very good moment for all of us. And let me go into my duty of welcoming our very own Venugopal C. Govind sir for this small virtual webinar. Really thankful to you and a big welcome to you, CG sir. Also to my faculty for the day, Amaljith P.J, who's from the profile I get to see, considering his age, the exposure that he is now used to and is now facing with regard to cooperative societies, their taxes, his involvement with a lot of government departments with regard to this has been very great and very stupendous to be seen from here. Indeed a proud moment for him as well. Like I said, being his first CPE, I intend to bring in a lot more. In fact, I should say we intend to bring in a lot more young members, or I would say young in terms of their presence on for seminar as a speaker. And we've got a personal target of at least 20 junior members to come over for various study circle sessions to chair and thereafter to the CPE arena. Let Amaljith be a good start and an example to a lot of young members in our group. Hearty welcome to you, Amaljith, and a very best wishes that I wish to convey on this occasion. So is it with my immediate past chairman, somebody who set a standard for me. You see a very happy and relieved Roy Verghese sir sitting, in his office chair, enjoying the moment, which is usually the other way around. The standard that he has set for me, the benchmark he and Srinivasan sir has set for me is in fact challenging. Hat-trick Best Branch Award is not an easy task. So is it with the infrastructure target that we have personally for this year. I look forward to achieving both, to be frank, with the blessings of the Almighty and my gurus and with the support of each one of you. Let me also take this welcome Roy Verghese sir to this event. I also have the Secretary of the branch, Deepa Verghese, and my other committee members, Salim A, Srinivasan, PR immediate past chairman, Sikasa chairman, Alan Joseph, and Jose K. Let me, on behalf of the branch and my personal behalf, let me welcome you all as well to this webinar. So is it with the participants that we have here? We are hoping to have around 50 to 60 participants for this webinar. A very warm welcome to each one of you. And I also request you to be part of various activities of the branch that we intend to undertake this year, especially considering probably you might have seen the mail that we had circulated yesterday, the ARS structure that we are working on. For the continuing members, it is just 3,500 rupees for the entire year. And for new members who are coming into this arena of ARS membership, it is 6,000 rupees. And as a matter of fact, this month alone, that we look to host and achieve 4,000 rupees worth of ARS programs. 35 hours of ARS programs is what we intend to look for in this month alone. And except for with the technical sessions left apart, there's a lot of non-technical sessions being planned for the bonding, for the good interest, and for the social bondage of the members in this fraternity. So with these very few words, let me once again, on behalf of the branch managing committee, welcome each one of you to this small webinar. Thanks, and over to you, Deepa.
Thank you, Chairman. Every time he acknowledges me as a Shishya in a public forum, every time he gives me that fatherly love, people ask me, how are you so close to VCG? And I said, he's my guru and mentor. It is with immense pleasure and pride today, sir, that I request you to kindly address this gathering. I never knew that I would get this opportunity. Please, VCG, sir, over to you.
Thank you. Thank you so much, Deepa, for the nice words. Honorable Chairman of the Ernakulam Branch of Institute of Chartered Accountants, Sri Renjit Waria. Honored past Chairman Sri Roy Varghese, Secretary of the branch Deepa Varghese, all the distinguished members of the branch managing committee, the faculty for today's session, Sri Amaljith, and all the participating delegates, fellow chartered accountants, friends. Good afternoon to all of you. I'm very proud at this moment of time, short of words, when I face all of you to address online. To see Renjit Waria sit in the chair of the chairman of the branch is a matter of great delight to me. His father was a very mischievous chartered accountant. As a student, incorrigibly unmanageable. He was like that, very boisterous. And I had a very tough time bringing him in line. But once he fell in the professional line, nothing could stop him. So K.K. Ramachandran is one among the topmost leading practitioners of the profession in Cochin. And I am so very proud of him as my very dear Shishyan. We have traveled all over India many times. For many audits, stayed together in many hotels, guest houses and all that. Those are very fresh in my memory. But Ranjit is altogether a very different cup of tea. Hugely committed professional, highly competent, very articulate, and able to express and communicate so freely, very friendly all the time, smiling, always ambitious, positive, absolutely optimistic in every respect. So Ranjit has been an instant winner. Wherever he is in whatever field I could see, including in the Shiva Kshetra Samiti where he followed his father's great footsteps, he has made an indelible imprint of his personality and his devotion and commitment to serve. That is important. I have no doubt about the fact in my mind that he will be hugely successful this year too. Whether he can exceed the finest of fine records set up by his very illustrious predecessor Roy Varghese, I think it is a challenge for him. I'm sure he will take it up. The year that is gone by of Roy Varghese has been fantastic. Though we had the pandemic and most difficult times, the way how so many programs have been organized, and most of them so hugely successful, and many events, some of them even physical, have all been organized at great, perseverance, effort, commitment, and all that. Roy Varghese here, you see, will be always recorded as one among the brightest of the years for this branch. So I must congratulate on this occasion past Chairman Roy Varghese and all his committee members for what they have done to the institute, branch, and the profession. That is important. This will live for a long time, even after they have finished their term. I particularly, as the founding secretary and a past chairman for 2 years of the branch, I look back and cherish the long way that the branch has come all these years and how successful it is now. Anyone, we talk to any senior member, president, past president, the Ernakulam branch is very special. So I'm very happy and delighted about that. And for Rajit to get a secretary like Deepa Varghese is so brilliant, a bullion, you see, always overflowing with vitality and energy, so pleasant and charming at all times. She also brings a lot of professional experience. She has been also one of my finest students for the CA course. And I'm so very happy and delighted to see her. I had no doubt that she will succeed in the profession, but to see her come up so well in the leadership role in the profession through the Ernakulam branch, I'm so very happy. I'm sure she will also very soon follow the great predecessors of hers and sit in the chairman's chair sooner than later and take the branch to much greater heights If I am around at that time, I will certainly be there to wish you all the very best. So God bless all of you. I am so very delighted that a webinar of this dimension has been organized today, the first by Ranjit, for your own perception. I must say there is nothing like a small webinar or a big webinar or anything like that. There is also nothing like a subject which is not very significant or something very important or that, nothing like that in profession. What is important, what is major, what is minor are all, dependent upon the various facts and circumstances. Every subject, you see, that we are handling now as chartered accountants, the wide range, whole gamut of professional subjects, each one is important by itself. And we have to make a contribution, you see, towards development of that line, every line. You see forensic auditing, for example. We have all done investigative audit, many investigative audits, appeared before several forums, examined and cross-examined by sub-judges, district judges, session judges, high court judges as witnesses, you see, for what we have given as a investigative audit reports, even for mergers of banks and all that. Now, that particular branch of auditing specialized. We all could do that those days. It is now becoming forensic audit with the advancement of technology, advancement of concepts, advancement of methodology, advancement of process and all that. So what you consider today, all that not very important. For example, after I finished several investigative audits, I decided as a policy for my firm that we shall not touch investigative audits because I have burned, you see, a lot of energy, time, effort, and all that in doing the work, and then appearing as witnesses, prosecution witnesses, defense witnesses, and all that before courts, and in high court and all that, and very eminent criminal lawyers appearing on both sides, cross-examining us and tearing it into pieces, trying to establish that all our audit reports are all erroneous, wrong, and all that are all not unfounded, not based on facts, not based on evidence. We are not fingerprint experts and all. I still remember how I have been, grilled for days, you see, for investigative audits that we do, but we all maintain whatever they may say. Lawyers can say many things. We say we do a professional job. We do a professional job according to the experience and expertise that we have, unto the best of our conscience. You see, that's all. Nothing more than that. It is not a guarantee or assurance or anything. We do the job and we find that. If we say 100 checks are fraudulent checks, we find that there are forged checks. They will question us. How do you say so? What is your qualification to say a check is fraudulent, forged? Are you a fingerprint expert? I will sign 10 times. Can you say which is genuine and which is not genuine? And these kinds of things, lawyers those days, eminent lawyers like Taikar Subramanian and all will tear us into pieces. So therefore, I was thinking, why all this? So as a policy, we have not been going, you see, anywhere near investigative audits for long. But now, I have been telling my juniors, but you can't keep away that. Forensic auditing is becoming a major area, and where you could have to contribute something worthwhile. So come on, some of you at least specialize. Will be very selective in taking up the audits, but you need to be qualified. So like that, any area which we consider not very important is emerging as very important. Looking at that perspective, I feel that I think this seminar is very important, and I must congratulate Amaljith. He's a young man. So nice to see young people like him, take up this responsibility of presenting papers and webinar, which will certainly helping me a long way. That is how we all grow. Yesterday I was in a session with Harish Salve in the evening. He was talking from London and I was talking from Cochin. You see, years ago when he was a chartered accountant, he was telling us again and again, you see, that it was because he's a chartered accountant basically, and then he became a lawyer, that he could be the best lawyer in India. Easily, he is today the best lawyer in constitutional law, best lawyer in taxation law, best lawyer in several of the civil laws, best lawyer, corporate lawyer, and he became, you see, the jurist, the counsel for the government of India before the International Court of Hague. You see, in the case of Kuldeep Yadav, India versus Pakistan, he was explaining to us in great detail how he argued the case, the tensions that he went through, and all that. And he was in the course of that telling me also, is it easy to argue taxation case? It is not as tough because facts are very clear. And as a chartered accountant, I used to be very sure of my facts whenever I am before the tribunal, which helped me when I became a lawyer before any judge anywhere, that you see, nobody can question me on facts. And when you become on law also, you see, you are untouchable. The senior most lawyer in India, Parasharan, was also there at that meeting, and he was paying, glorious tributes to Harish Salve. Parasharan was 94, and Harish Salve is 62, and I am 78, and Parasharan was paying such tributes to Harish Salve. I wish Harish Salve, acknowledged, and he said, he is what he is today because of only 3 lawyers in India. 3 lawyers are, one is Nani Palkiwala, the other is Suresh Rabji, and the third is Parasharan. He has learned from Parasharan the way how he used to argue cases, the way how he will present his cases, the way how he will articulate before benches and all that. And it gave him so much of impetus to remain up to date in the profession and to follow their footsteps. And he said several things he said which he learned from Balkiwala and from Parasharan and all that, which made him what he is. He is the first and the only Queen's Counsel. He sits in the Council of the Queen of England to be nominated from India. And he shifted his practice to London and is now in London. And he's practicing from London. I said, we are all very proud of you. As a chartered accountant, I am proud of you. Because in the 80s, we have together participated at least in 2-3 sessions in Bombay, in Nagpur. You remembered, and I remember. He used to present papers, I used to present papers. We were together as young people. He was much, much younger. I was a rapporteur, and he used to be paper presenter. And he used to make such brilliant presentations even in those days. So that is what a chartered accountant is and what he could be. Therefore, I have no doubt about the persons like Amaljith, Tenjit Warrior, Deepa, all of you. So you will certainly find new pastures to grow in the profession. Well, I'm happy and delighted that Amaljit has taken up this subject of cooperative societies, taxation of cooperative societies. See, I must have attended at least 500 or 600 seminars in taxation all over India in the last 50 years, but this is the first time. You see, I'm joining you on a seminar on taxation of cooperative societies. I'm happy that such a specialized subject has been taken by Amaljit. I'm happy to know that there are people who are specializing in that area of practice also. Now, looking at that, I must have appeared at least for 4 or 5 cases for or against, Department on Taxation of Cooperative Societies, and those days that was not that very important. But now today, the scenario has changed. Now, you see, cooperative societies are enlarging in its range and its scope and its width and breadth all over the country. We have close to 99,800 cooperative societies in India, of which nearly 1,600 are cooperative urban banks. It is with reference to these urban banks and the consumer credit societies that all the cases, especially from Malabar areas and all, used to come up those days, and he used to argue before them. Essentially, those days with reference to the deduction under ATP of the Act. ATP was emerging like that, several interpretations and all that. So that was very major area. Those days we must have had some 800 or 900 cooperative societies in Kerala as a whole, but today there are 14,500 and odd cooperative societies in India. Of which nearly 4,000 are there. I was in a seminar of cooperative societies organized, some couple of weeks ago, where they said 4,000 cooperative societies are dead and defunct in India, and we need to, revive them. And cooperative societies are extending their reach in almost all the areas in sectors like retail, they are there; in housing, they are there; in construction, they are there; in banking, they are there; in non-banking finance, they are there; in agriculture, they are there; in marketing, they are there; in consumer cooperative societies, they are consumer transactions, they are there. Practically every range of activities are coming under cooperative societies. And I told you there are 99,500 societies in India, of which 50 cooperative societies can be compared to the top 50 in the listed companies in the Nifty stock exchange of NSE. So it's that big. Your cooperative societies like Amul Cooperative Marketing Company with thousands and thousands of crores. You can imagine the profit. I once went through the assessment order for some reference purposes years ago. Huge, my God. It's a cooperative society, but such a behemoth. Then we have got Indian Farmers, Fertilizer Cooperative, that is against 3 times that of FACT. There are 48 such giant cooperatives, you see, the assessment of which are all very difficult, very, very difficult. essentially ATP, whether ATP extends to all kinds of cooperative society, what kinds of cooperative societies, what kinds of deductions are available. And the courts have gone into this question many, many times, unending litigations. Even recently, I saw in January 21, I read a Supreme Court, decision in the Kanun website that where they have held, they overruled the Kerala High Court's decision. Amaljith may know perhaps the Kerala High Court held that only because you get registered as a cooperative society, one, you are not entitled for ATP exemption for all the time. Because ATP substantially, exempts a large chunk of its profit. Earlier, it used to be said that it is not at all applicable to banks, and it is not at all applicable to non-finance banking companies and all that. Then judicial authorities have clarified, no, it may apply to banks also, which do not come under RBI. A banking company is one which comes under RBI. If it is not coming under RBI, ATP should apply to them also. So on this, in application of ATP, there used to be. Now, Kerala High Court made a very difficult decision. I was wondering about that. They said that even if once registered as a Consumers Credit Society and you are given ATP deduction, but subsequently you are not following that objects very carefully, and you are not in line with the major objectives. You have gone away from your objectives and you are doing something else and all that, and giving credit to non-members and doing business and all that. You are not entitled for ATP, not at all entitled for ATP deduction. That is a full bench decision of the Kerala High Court. And recently, when it came to Supreme Court in the bench of Nariman and Naveen were all in the Supreme Court benches. Lawyers were so competent lawyers. They said, no. It cannot be like that. You cannot simply say that you are not entitled to. If they are registered at cooperative societies, they are given an eligible exemption. They are exempt. They are exempt. You look into that, and you find, if you find that they have given credit to non-members and all that and engaged in allowable, deductible kind of activities, you exclude them. But you cannot say that ATP deduction cannot be given. You can exclude that exemption for deduction under ATP and nothing more than that. So, that way ATP is emerging, the assessment pattern is also changing. And as you all know now, in the last finance bill 115, BAD has been introduced, very good. Section 150 AD authorizes that banks, consumer credit societies, and cooperatives and all that they can be assessed at 22%. A lesser rate of 22%, they don't have to go for the higher rate under the slab. So it is assessed base 22%. With a rider that once you opt for that 115 BAD, you will not be eligible for deduction under any other deduction which cooperative societies are entitled to, including Section ATP. So societies, which have that kind of, case to offer their income at a lower rate of 22% can certainly opt for that. So that way, the reason is that to encourage, cooperative societies. The 3 farm laws, you find the fighting going on in farm laws unnecessarily. You see, any sensible government and sensible set of farmers can solve this in a matter of just 2-3 hours. What is there? What are they arguing about? There is nothing basically wrong with the farm laws, but maybe the wording, the bureaucrat has made a mess of it. I've made it very clear in several forms. So the government should very honestly, if they feel like that it is not worded properly, they will withdraw and reword it correctly. But you cannot question. The government's intention is very clear. You see, the farm income has to be brought, in line with modern developments. Agriculture today has a growth rate of only 3.2%, whereas we must be growing at 5, 6, 7%. With an overall, acreage under agricultural cultivation in India of something like, almost 2/3 of China's, and we are not producing even 40% of China's output in agriculture. So agricultural productivity is very low, and our agricultural marketing is absolutely outmoded. So modernization is needed, no doubt about that. So cooperatives will have to play a huge role. The only possibility is that the farmers are afraid that the businessmen will swallow them. They will not have a competitive edge to discuss, even, to take up their case with the business houses who will be entering the agricultural products purchase market instead of the mandi system. Okay, if that be the case, farmers should organize. Farmers should organize as large farmers cooperatives. Only 17% of India's farmers are large, who control about the 73% of India's agriculture. Balance 27% of India's agriculture is in the hands of 83% of the small and marginal farmers. They must organize. Government should have brought in a legislation. You see, of course, in the Companies Act, we have the provision for forming producer companies. but that has not become, very acceptable to the farmers. During Jawaharlal Nehru's time, he wanted to introduce cooperative farming in a big way. That was also not successful. So probably, but in fields like sugar and all that, cooperatives have gained ground. And Kerala is a very, very major area where the cooperatives can establish itself. So therefore, over a period of time, to cut short, over a period of time, you see, assessment of cooperative societies will gain importance, and this is very essential that all of the young partners, young professionals, new generation professionals become acquainted with the nuances of the cooperative societies taxation. And I therefore appreciate that the branch under Ranjit Warrior has taken up this particular subject for discussion and deliberation today. And I also once again congratulate Amaljith, who has come forward. I will very keenly listen to your presentation. I wish the seminar all success. Thank you very much. Thank you once again, Ranjit, for bringing me here on the screen. Thanks a lot.
Thank you so much, VCG sir. It was really nice listening to your experiences. Today, to speak to us on the taxation of cooperative societies, we have CA Amaljith P.J. with us. Amaljith qualified as CA in 2011 and is presently practicing as the proprietor of Messrs. Amaljith and Associates at Pallarivattam, Kochi. They practice with a special focus on tax matters of cooperative societies. He was formerly the CFO of Macom Solutions, a Manappuram Group company, and is a tax advisor to various boards established by the Government of Kerala under the Kerala State Cooperative Societies Act. He is a faculty member in training programs conducted by KIMD, established by the Government of Kerala. He regularly appears before the Income Tax Appellate Tribunal and the CESTAT in Bangalore. He's handled more than 500 appeals and 200 assessments during his last 5 years of practice. With these words, may I call upon CA Amaljith to kindly talk to us on taxation of cooperative societies. Over to you.
Thank you for those nice words of introduction. Most respected Guru of the profession, Venugopaal sir, Chairman of Ernakulam branch, Ranjit Warrior, the past Chairman, O.A. sir, Secretary Deepa Madam, and other respected committee members, most respected senior fellow members and leaders of the profession, and my dear friends. At the outset, I express my sincere thanks to the management committee for granting me this opportunity. As Ranjit has said, it is my first seminar, first CPE seminar. And I am privileged to be here to talk to such an august audience. The topic of the day is tax matters of cooperative societies, the recent developments. And as Venugopaal sir said in a nutshell, the decision of the Honorable Supreme Court with relating to deduction under Section 80P. We are going to discuss about that decision of the Supreme Court, which were the issues that were prevailing before the decision, and what are the issues or the disputes that are addressed in that decision of the Honorable Supreme Court, and what are the disputes that might arise from the misinterpretation of this judgment, and the issues that are not addressed in the judgment because it was not a question of law before the court, and what we should do in the assessment while filing the return of income and during the appellate proceedings with relating to cooperative societies. As Venugopaal sir said, in Kerala there are around 15,000 cooperative societies, and almost 1,200 are defunct. Balance around 14,000 cooperative societies are there, and still are there many cooperative societies which don't file return of income. And though the Section 80P that we are going to discuss today is a small section, the amount of disputes or the disputes that arise from that section is in large number. Myself have appeared before the courts, the tribunal and the appellate commissioners, and handled more than 500 cases during the past 5 years itself. So let us see what were the issues that we will discuss in brief what is deduction under section 80p. Then we will see what were the issues that were prevailing and the issues that are addressed in this Supreme Court decision, the further issues that need to be addressed, and the way forward. Before we proceed to this discussion of these provisions, I wish to attract your attention to a story that is narrated by Jagdish Srikumar in a movie Boeing Boeing, which was directed by Priyadarshan starring Mohanlal. In that movie, Jagdish Srikumar is playing a role of a writer and he is narrating a story to a chief editor of a newspaper, which is played by Shankarani. So the story goes on like this. There was a family, there was a father, there was a mother, and there were two kids. They were leading a happy life. And on one day, night, there came a bomb, boom. There came the second bomb, boom. Then came Charaba Charaba bomb. That was the story narrated by Jagdish Srikumar. Similar story we can find in case of the film Drishyam, George and family. They were leading a happy life. And on a day, there came a bomb, that boy. Likewise, in India, there were so many cooperative societies. And in the Income Tax Act, there was a section 80p. I think during my days as a student, I qualified in 2011. During the days, I don't remember such a section that I have studied. This section was there in the Act. It was sitting silently there without causing much disturbances. Then, in the year 2006, there came an amendment by the Finance Act 2006. A new section, subsection 4, was incorporated in the section 80p. Thereon, the dispute started. In the assessments, the bombs started to come. You are a cooperative bank, the first bomb, so you are not eligible for deduction. You are not a PSES. Only if you are a PSES, you are eligible for deduction, the second bomb. Oh, you are not providing agricultural loan, or the agricultural loan provided by you is only 5%. You are not eligible for deduction. You deal with nominal members, they are not shareholders, they don't have right to profit. So you are not eligible for deduction. You violate the principle of mutuality, so no deduction under section 80p. You don't have an RBI license? Oh, then you are doing banking business without license. That is an illegal business. So no expenditure can be allowed because you are doing an illegal business. Another bomb. You receive interest from investment from other cooperative societies. You are not eligible for that because it is income from other source. Similarly, there were so many bombs. And most of this got diffused by the order of the Honorable Supreme Court. And there are a few that still need to be diffused. So we will see which are those that still need to be diffused and shall take the precautions. Let me share the screen. Is it visible?
Yes, it's visible. Please go ahead.
Yeah, thanks. So before we start to discuss the section 80P, first we need to understand what is a cooperative society. In section 219 of the Income Tax Act, a cooperative society is defined to mean a cooperative society registered under the Cooperative Societies Act 1912, that is the Central Act, or registered under any other law for the time being prevailing in the state for the registration of cooperative societies. So in Kerala, the act is Kerala Cooperative Societies Act 1969. So if a cooperative society is registered under the Kerala Cooperative Societies Act, it is a cooperative society for the purpose of Income Tax Act. Now, as per Rule 15 of the Kerala Cooperative Societies Rules, after a cooperative society is registered, it can be classified into different types based on its objectives and activities. There are different types of cooperative societies. For example, district cooperative banks. The only district cooperative bank that is now exists is Malabar District Cooperative Bank. Kerala State Cooperative Bank, RAPCO, Milma, the service cooperative banks, federations like Matsya Fed, Kera Fed, etc. Urban Cooperative Society, urban cooperative banks, and the Cooperative Agricultural and Rural Development Bank. Labor societies like Uralangal Labor Society, which recently reconstructed our Palaripam Bridge, or Women Welfare Society, Employee Society, Fishermen Society, Social Welfare Society. So many classifications are there. But by birth, all these are cooperative society for the purpose of Income Tax Act. Because in Income Tax Act, for the word cooperative society, it only refers to registration. And what is the proof of registration? The registration certificate. So, if a cooperative society is registered under the Act, primarily it is a cooperative society. Then it can be classified to different types. Majority of the disputes with respect to 80P generated because of mixing this classification into the status cooperative society. There are so many confusions. If you are a PSES, then the assessing officer will state that you have to prove that you are a PSES. You don't have any reliance of a cooperative society because you are a PSES. Similarly, the word cooperative bank. So the first thing we need to understand is that by birth of the society, it is a cooperative society for the purpose of Income Tax Act, despite the different classifications. Now, the disputes that were prevailing is 80P only for PSES, that primary agricultural credit society. And in majority of the cooperative service cooperative banks, the word bank is used. Cooperative bank is used in the name. It is actually permitted under the Banking Regulation Act for PSES. As per Section 3 of Banking Regulation Act, nothing in that section Act will apply to a PSES. Now, with regard to non-agricultural loans, if a society provides non-agricultural loan, are they eligible for deduction under Section 80P? Now, the mutuality. Many assessment orders during the last 2 years were referring to mutuality. You are dealing with nominal members, C class members, D class members. So you are violating the principle of mutuality laid down by the Supreme Court in the case of Kumbhakoണം chit fund case. Also, with regard to the trading profits, are they eligible? Are the cooperative societies eligible for deduction with respect to the profits generated from trading activities? Now, the RBI license issue. Whether you have RBI license? If yes, you are a cooperative bank, so you do not have deduction under Section 80. If not, you are doing illegal business. And the filing of return. If you file it belatedly, you are not eligible for deduction. And the disallowance of expenses. If the TDS on a payment is not deducted, 40 IA is applicable, and 30% of that expense need to be added back to total income. Is deduction under Section 80P available on that enhanced income? There are disputes. And the reserves and provisions in the profit and loss account. For example, there is a difference in the disclosure of provisions in case of a cooperative society. For a company, for example, the opening balance in gratuity provision was 10 lakhs, and based on the current valuation, it needs to be 12 lakhs. What we do is that the 2 lakhs, we will show it as a provision on the debit side of profit and loss account. But for the cooperative societies, they show the opening balance 10 lakhs on the credit side, and they will show the 12 lakhs on the debit side. So the net amount is 2 lakhs, but it is disclosed as such. So while filing the return of income, we will add back those provisions debited to the profit and loss account, like bad debts provisions or various funds allocated out of the profits. These will be disclosed on the debit side of profit and loss account. So we will add back those, and we will reduce the provisions which are disclosed on the credit side. But the assessing officer is happy that we are adding back the provisions in the debit side, but won't allow those reducing the provisions which are credited in the profit and loss account. And there were issues, the assessments stating that the registration certificate is not issued by the registrar himself. It is issued by the joint registrar. So you are not eligible. And when we file the return of income, as per Section 80A5, if we claim the deduction in the return of income, we are eligible. That is, if we fail to claim the deduction in the return, we are not eligible for, because of that fact itself, that we are not claimed in the return. So when we file the return of income for a society which has incurred loss, we can't fill the amount of deduction because there is no positive income. And if during the assessment, the assessing officer has made some additions and the loss become profit, the assessing officer is taking the stand that you have not claimed deduction, so you are not eligible. And the impact of interest received from district cooperative banks, other cooperative societies, other banks, and treasury. And the unexplained cash credit. In many cases, the details of deposits which were received during the year was asked, and the societies didn't furnish that. So the total deposits that were received during that year is treated as unexplained cash credit and added as income from other source and denying the deduction under Section 80. These were the issues that were prevailing. Now, let us have a quick glance at Section 80P. The marginal note, the heading to the section states that it is a deduction in respect of certain incomes of a cooperative society. So, it is a deduction, first of all, and it is not an exemption. In some of the assessment notices, 141 notices that are coming, the assessing officer is asking that why shouldn't we invoke 14A in respect of the exempt income claimed by you. It is not an exempt income, it is a taxable income, it is part of gross total income. From that, we are claiming a deduction. And deduction in respect of certain incomes, not all income. The incomes which are eligible for deduction is listed out in 80P. Only for that income, it is the society is eligible for the claim. And it is for the cooperative societies, which refers to all cooperative societies registered under the Act. So far as 80P is concerned, the eligibility for deduction, once you are a cooperative society, you are eligible. The quantum of deduction, it needs to be computed based on various clauses and sub-clauses of 80P. So, during the assessment or when an assessing officer asks you how to prove the eligibility, to prove the eligibility, we need to only provide the registration certificate. Now, how much deduction I am eligible, that we need to prove. In Section 80P, the first subsection 80P2(1), 80P1, it states that for the cooperative societies, if the income is included in gross total income, the deductions that are disclosed, specified in subsection 2 are eligible. And in subsection 2, various deductions are listed out. The first one, 80P2A1, a cooperative society carrying on the business of banking or providing credit facilities to its members. So, the type of society is cooperative society itself. There is no condition of a PSCS there. It is a cooperative society. What business they should do? Either business of banking or providing credit facilities to its members. So, it has to be with the members. The second clause, sub-clause, cottage industry. The type of industry is mentioned. If the cooperative society is engaged in the business in cottage industry, the profit generated from that is eligible as deduction. The third sub-clause, marketing of agricultural produce grown by its members. Here the type of activity is mentioned. It should be the marketing. And what is the produce? It is the agricultural produce grown by its members. In this clause, the word agricultural is mentioned. It has to be the agricultural produce. In clause 1, providing credit facilities to members, there is no condition as the loan should be agricultural loan. The fourth, purchase of agricultural implements, seeds, etc. for the purpose of supplying it to its members. Here, the purchase can be from anywhere, but the supply should be to the members. The earlier clause marketing of agricultural produce grown by members. It should be procured from the members, but the sale can be with anyone. So ATP is not based on mutuality. ATP is available based on each activity type that are specified in those clauses. The fifth subclause, processing of agricultural produce of its members without the aid of power. Here is also the type of activities mentioned. The produce shall be of the members. It need not be grown by the members. It shall be the produce of its members. And the sixth one, collective disposal of labor of its members. Like the Uralaga Labor Society, a society which has members as its labor, and they take a work, and that labor will be used for the purpose of execution of that work, and the profits generated out of that. Labor cooperative societies. The seventh one, fishing or allied activities. The societies engaged in fishing or allied activities, or purchase of materials or equipments connected with fishing or allied activities, or supply to its members. So, if a society is engaged in all these activities, the profit from each of these activities has to be segregated and it has to be claimed separately. Now the clause B, it should be a primary society. The type of society is mentioned here. It should be a primary society, not an apex society. Supplying milk, oil seed, fruits, vegetables, etc. grown by its members to the federal society, government, etc. So here is the type of society is mentioned. The type of activity is also mentioned. Clause C, any activity other than those specified in clause A or clause B. If that cooperative society is a consumer cooperative society, the deduction available under section 80B2C is 1 lakh. In case of other cooperative societies, it's 50,000. So a cooperative society is engaged in some activity which are not mentioned anywhere in other clauses. This deduction is available. If that society falls into the type consumer cooperative society, 1 lakh. In other cases, 50,000. Now, E, income from letting of godown or warehouse for storage, processing, or facilitating marketing of commodities. The type of activity is mentioned. The profit from that activity, it is eligible as deduction under section 80B2E. B, interest or dividend derived by a cooperative society from its investment with any other cooperative society. So, here the disputes still exist. So, what is the income? Interest or dividend derived by who? A cooperative society. From where? From another cooperative society. So, when I receive interest from a district cooperative bank, whether I am eligible for deduction, it's a question of dispute nowadays. As far as I am concerned, in my view, it is eligible because it is also a cooperative society. A cooperative bank is also a cooperative society. ATP4 is hitting the society which is claiming the deduction. It is not hitting the parties from where this society has received its income. The subclause F. Cooperative society other than housing society, urban cooperative society, and urban consumer society, or society carrying on transport business, and if it is engaged in performance of any manufacturing operations, etc. There is a reduction from income from house property and income from in-restaurant securities if gross total income doesn't exceed 20,000. This is applicable for very small societies. Now the subsection 4. By the Finance Act 2006, this subsection 4 was included in section 80P. Subsection 4 states that the provisions of this section, the section means the 80P, shall not apply in relation to any cooperative bank other than Primary Agricultural Credit Society (PACS) or Primary Cooperative Agricultural and Rural Development Bank, which was earlier known as Land Mortgage Banks, PCAD Bank. So, Section 80P restricts deduction under Section 80P for a cooperative bank. So, till now we have seen that Section 80P is applicable for all cooperative societies. But now, when you fall into this cooperative bank, you are not eligible. With two exclusions. If you are a PACS or PCAD bank, you are still excluded. It doesn't mean that Section 80P, deductions under Section 80P is available only to PACS and PCAD banks. Because there are cottage industries, there are labor cooperative societies, there are marketing societies. They need not be PACS or PCAD bank. So it is an exclusion from the exclusion. That is, if you are a society, you are eligible, but cooperative bank is excluded. But if you are PACS and you fall within that bank definition, still you are eligible if you are a PACS and PCAD bank. But the dispute started from here. With the introduction of subsection 4, the dispute started. The negotiators started to state that only for PACS deduction under Section 80P is available. Now the disputes went to courts. And let us have a brief understanding what all decisions that came, which led to the Supreme Court decision. Perinthalmanna Service Cooperative Bank case. In that case, the assessing officer asked during the assessment, asked the assessee to prove that it is a PACS. The assessee submitted the certificate from the registrar stating that it is a primary agricultural credit society. The assessing officer relied on that certificate and granted deduction. Later, Commission of Income Tax invoked 263 and reassessment was started, against which they filed appeal and it went to High Court. The High Court said that the assessing officer should verify the facts. He should not merely depend on a certificate furnished by the assessee. He has to go beyond that to see if whether the society is functioning as a PACS or not. He is duty bound to verify that, and he has failed in that. So there is no fault in invoking Section 263. So this decision was there. Meanwhile, there were assessments which were filed by the assessing officers themselves without granting deduction under Section 80P, stating that the agricultural loans were low, so you are not a PACS. The assessees were furnishing the certificate and stating that they are PACS. And those cases went to High Court in the case of Chirakkal Service Cooperative Bank case and others. And after the arguments which was led in the, for the associates by Firoz in the advocate Firoz and Arjuna, the High Court opinion that who is the authority to classify a society as a PSCS or not? It is not the assessing officer. It is the authority under the KCS Act, Kerala Cooperative Societies Act. It is the registrar. If the registrar classify a cooperative society as a PSCS, the assessing officer has to rely on that, and he shall not probe into the activities of the society to determine whether it is a PSCS or not. This was the judgment. So, during that judgment also, the main focus was on PSCS, not on societies. Whether you have a PSCS, if yes, eligible, else not. That was the point of view. Because that eligibility was questioned. And in Chirakkal, when we go through that decision, the High Court never said that assessing officer shouldn't verify anything. The court opinion that the assessing officer shall not probe into the activities to determine whether it is a PSCS or not. But the assessees, the cooperative society, started to file the certificate stating that we are a cooperative society, so we should be granted deduction, and the assessing officer shall not probe into any of the activities. So this decision of the Perinthalmanna Service Cooperative Bank, it was also a decision of the division bench. It was not brought into the attention of the court during the arguments of the Chirakkal case. So when that order came out, there were two different orders from the same High Court which were prevailing, and the assessees were depending on the decision of Chirakkal, stating that it is the latest. But the department started to rely on the Perinthalmanna case. Still, they were framing the assessments, stating that you are not a PSCS. We have not accepted the decision of the Honorable High Court, and we are filing an SLP before the Supreme Court. So we are relying on our previous stand itself, but we won't enforce the demand till the SLP, till a decision is coming from the Supreme Court. Now that case, the leading case was Karakoram Service Cooperative Bank. The SLP was filed, and myself with advocates of High Court, and we went to Delhi to brief the advocates to appear before the Supreme Court to see for the decision whether the SLP should be admitted or not. But as the CBDT circular came, the amount involved, the tax amount involved was low, so the case was withdrawn. At that moment, the appellate authorities started to give deduction based on the certificate itself. The assessees were getting benefit from the appeal commissioners and tribunal based on certificate. Then there came the decision of Citizen Credit Cooperative Society. It's a society in Andhra Pradesh. And in that case, the Supreme Court analyzed the section 80P and said they are eligible for deduction based on their activities and their status as a cooperative society. Then the court went into the facts. When the facts were analyzed, it was registered under the Mutually Aided Cooperative Societies Act in the state. And in that act, there was no provision to do business with non-members or nominal members. There was no such category as nominal member. But this society was carrying on the business with nominal members. So the Supreme Court said that this society has carved out a new category of members, and they were doing business with that category of members. It is in violation of the act in which they are registered. So they cannot be treated as a cooperative society under that act. So they are not eligible for deduction. Soon after this decision came, the assessments in Kerala were framed stating that you are dealing with C-class members, which are nominal members. They do not have voting rights. They do not have share in the profit. They can't vote. So, based on citizen case, ATP was denied. Also, mutuality was mentioned. We have seen that mutuality has nothing to do with Section ATP. Nowhere in ATP it is mentioned. Because a marketing society, it will be dealing with many others, outsiders. There is no mutuality. A labor society, they will be constructing a house or a bridge for someone. Then he will not be a member. So mutuality has nothing to do with ATP. Still, they are framing assessments stating that mutuality is missing. Also, you are transacting with nominal members, which is in violation of the Act. And our tribunal, ICAI Cochin bench, said that the facts are not similar in case of cooperative societies registered under the Kerala Cooperative Societies Act. In case of KCS Act, the definition of member includes nominal member also. So there is no violation under KCS Act if we are dealing with nominal members. So the societies are eligible for deduction. Now the cases came before the High Court, and the leading case was Mavilai Service Cooperative Bank. And before the High Court division bench, the revenue argued that from the division bench itself there are two different decisions. In Peridhalmanna, High Court stated that the officer shouldn't rely on certificate, they have to probe into the activities. In Chirakkal, the court said that they shouldn't probe, the certificate is enough. So the matter was referred to a larger bench. The larger bench opinion that Chirakkal is bad law. The assessing officer has to verify to arrive at a conclusion that whether it is a PSCS or not. The court also opined that Citizen Credit Cooperative Society case also confirms that the assessing officer has to verify and see if it is actually working as PSCS or the classification they say. Here also the biggest issue was that everything was focused on the classification, not the status of cooperative society, but the classification, PSCS or not. And before the tribunal and before the assessing officers also, when we were telling that we are claiming as a cooperative society, never mind we are a PSCS, just as a cooperative society grant us deduction. But the response was you have to, if you are classified as PSCS, you have to claim as a PSS only, not as cooperative society. So many issues were there after this Mavilai decision came in 2019. Now the final judgment from Honorable Supreme Court came in a short span of time, within 1.5 to 2 years. This decision from a three-bench headed by respected Chief Judge Nariman, Chief Justice. It's a clear, precise judgment. So many issues that were prevailing are addressed and decided. The Kerala High Court larger bench decision was set aside. And the ratio disadvantage of citizen was also discussed. The court said that as far as a cooperative society is registered under the State Act or the Central Act, it is a cooperative society and their eligibility is proved. Eligibility for deduction and the amount of deduction attributable to these activities, both these are different things. To prove that you are eligible, the assessors has to state that they are registered under the Act and show the registration certificate. The assessing officer shall not go beyond that to see whether it falls into different types. So, court opinion that as far as these are registered under the Act, it is a cooperative society, whether it is classified as X or Y. So the eligibility is proved. Now the quantum. To determine the quantum of deduction, the assessing officer has the power to verify whether the deductions claimed are correct or not. And the assessees are duty bound to produce the details to prove that the quantum, for example, if I am claiming deduction under section 80B2A1 for providing credit facilities to members, I have to prove that this much profit I generated from this activity. If I am claiming deduction under section 80B2D, interest received from other cooperative societies, I have to prove that this much interest I received from these cooperative societies. So the burden to prove that the quantum of deduction is on the assessee, and the assessing officer can verify that. Just a moment. Now, whether the loans need to be agriculture? No. Court said that there is no such condition or limitation in the clause 80B2A1. We have already seen that clause. Cooperative societies carrying on the business of banking or providing credit facilities to its members. There is no question of agriculture or non-agriculture. So what will be the type of loan that is disbursed? The profit generated from that is eligible as deduction. The assessees are no longer on a burden to prove that it is an agricultural loan. But it should be with the members. If loan is disbursed to a non-member, the profit generated from that is not eligible for deduction. But whether the societies can do that, can they provide loans to a non-member? Whether it will be an illegal activity? The court also said that as per the provisions of the Kerala Cooperative Societies Act, the Act permits the societies to provide loans to non-members also. So the fact that they are providing loans to non-members is not a disqualification. The profit generated from that is not eligible as deduction under section ATP 2A1. The maximum deduction that can be claimed in respect of that activity is 50,000 under section ATP 2C. Other activities. Now the question, member, whether nominal member is also member. This also the court clarified. If it was not done, there will be many disputes on that aspect. But it is also clarified in the last paragraph, stating that as the definition of member includes nominal member in Kerala Cooperative Societies Act, member means a member which includes a nominal member. Nominal member is a member and not non-member. So even if the loans are disbursed to nominal members, the profits generated from that is also eligible as deduction under section ATP 2A1. Now, the argument put forth by the revenue was that the intention of the legislature is to restrict the deduction under section ATP 2A1 only to agricultural loans. That is why they have mentioned agricultural PACS in ATP 4. And the court said that it cannot be implied. ATP 4 should be read as a proviso. In the main section, there is no such condition as agriculture. Whenever the legislature intended to include agriculture, it did. In ATP 2A3, marketing of agricultural produce, there agriculture, it was included. Supply of agricultural items to members, there the agriculture was included. So whenever the legislature decided to include it, it was included, and when it was not included, it cannot be implied. Now, whether these societies, for example, the leading case, Amaljith Service Cooperative Bank, whether it is a cooperative bank, it uses the word bank. The court said that cooperative banks are cooperative societies who must possess a license from the RBI to do banking business. So, if a cooperative bank, cooperative society, service cooperative bank, do not possess the license from RBI, it shall not be treated as a cooperative bank. Now, and the court added that the ATP, it must be read liberally, reasonably, and if there is ambiguity, it should be read in favor of the assessees. Because this section is there to promote the cooperative segment. And the citizen case, the ratio doesn't be. The court opinion that if there is a case and a judgment, the ratio of that judgment, it only follows. The facts don't follow to the next cases. In the case of citizen case, the ratio laid down by the court was in favor of the assessees. The court said, you are a cooperative society, you are eligible for deduction. But the facts, it was registered under an act in which there was no condition of doing business with non-members. That facts should be segregated and this ratio should be followed. And the Honorable Kerala High Court's larger bench erred in following that ratio. So this is the summary of the decision of Honorable Supreme Court. Now, what are the new disputes that may arise from this judgment or the issues that are not addressed because it was not a question before the court, like interest on investment. The assessments which are in progress now for the assessment year 18-19. So many assessees are receiving the notices, the show cause notice, the pre-assessment notice, stating that you have received interest from your deposits with so and so cooperative banks. So you are not eligible for deduction under section 80P2A1 for that interest because it is income from other source. Secondly, it is not received from members. 80P2A1 speaks that the profits and gains from the business of providing credit facility to members. So, what my view is that any entity, it may not be a cooperative society, which is engaged in the business of providing credit facility. For that, they need fund. The cooperative society is collected as deposits from members. It is why they are collecting deposits for the purpose of providing loans. And these deposits collected, I can't keep it idle. I have to keep somewhere from with like deposits to generate some income because I am paying interest to the depositors. So it is part of this business. If we see the clause, it is the profits and gains generated from the business of providing credit facilities to members. It is not the income from members. So this interest is also an income or gain generated from this business. It need not be directly from the members. What is my business? I am providing credit facility to members. For that, I have to collect deposits. I can't keep it idle, so I am depositing. So it is part of business income. Our Cochin Tribunal has held that it is part of business income and deduction under section 80P2A1 is eligible for that in so many cases. Now the income from cheats or GDCS or MDS, that is group deposit credit scheme or monthly deposit schemes, is similar to chitti. It is not governed by the Chit Act, it is done with the permission from the Registrar of Cooperative Societies. That is the difference. And it is done with the members. So whether the income generated from the states, the commission, which we call it as foreman commission, the commission or the interest, is it income generated from the business of providing credit facilities? A few years back, this dispute was also settled by Honorable Kerala High Court, stating that it's part of credit business itself. Now the miscellaneous income. In miscellaneous income, there will be so many incomes such as notice charges, application fee, legal fee, commission, then local rent. If a society has let out a portion of its building, the rent from that. Like that, there will be so many incomes. Is society eligible for deduction for those incomes? That is another area of dispute now. In respect to certain incomes like rent, there is no deduction because it's not specified anywhere in ATP. Only in one section, the rent from the go down for the certain categories mentioned there. It is eligible. Other rental incomes, it is not eligible. Auditorium rent, it is not eligible. So now the assessment earlier till the judgment of Honorable Supreme Court, till last year assessments, the assessing officers were focused on the eligibility, whether you are eligible. They were trying to prove that you are not PSCS, you are a bank, you are not eligible for deduction. And the board amount claimed by us was denied. And some officers were granting deduction based on the percentage of agricultural loans. In Thrissur and Malappuram, the assessment orders were around 45 pages, stating only these facts that we are not a PSCS, supporting judgments, we are not dealing with non-nominal members, you are a bank. To substantiate these three, they were quoting so many judgments and all, and they were never going into the quantum of deduction. Now, the eligibility can be proved with the certificate, but the quantum, it need to be analyzed, and while we file the return of income itself, we need to segregate each and every income into different categories, and for those that are coming under ITP, we can claim. Others, we can total it. The 50,000 deduction PTP 2C can be claimed. The balance, they have to pay tax. Now, the enhanced incomes. If there is disallowances under section 48 IA for non-deduction of TDS, or cash payment exceeding 10,000, 48.3, or any other disallowances, the income will enhance. Is this enhanced income is eligible for deduction? There is a department CPE circular 37/2016. It states that the enhanced income is also eligible for deduction under section 80B. The only fact is that if the society is engaged in different types of activities, some of which are eligible for deduction, some are not, either this amount need to be segregated, divided, or if it is pertaining to some activity, if it is eligible for deduction, can be claimed or not. But the mere fact that it is disallowed, the deduction under section 80B is not denied. And there was a judgment from ICAI Cochin bench in A2 Man of Service Cooperative Bank. It says that based on the circular, the enhanced income due to disallowance of expenses is also eligible for deduction. Now, in case of interest on investment, there is a CBDT circular 18/2015, which states that it was issued after a Supreme Court judgment in the case of Naran Shah Central Cooperative Bank. In that case, Supreme Court held that the cooperative, it was a cooperative bank, not a society. They are liable to keep funds with RBI. So, on the interest generated from that, is the income from business. Likewise, in Kerala Cooperative Societies Act, for those societies which are not coming under the purview of RBI or Banking Regulation Act, which are not cooperative banks, they have to maintain fluid resources. That will be the 100% of deposits matured and 20% of the balance deposits. So it is a statutory requirement to keep that fund. So interest end of that fund is eligible as deduction under section 80B2A1 as business income. So the department clarification itself was there, and in that circular, the department said that all the appeals that were filed by the department on this aspect will be withdrawn. But still, this is not followed in the assessments by the assessing officers. Now, the misinterpretations of the judgment of Honorable Supreme Court. 2 weeks before, I received a pre-assessment notice wherein a paragraph, the paragraph I would say, paragraph 33 of the judgment was quoted by the assessing officer. And the conclusion arrived by the assessing officer is that the Honorable Supreme Court said you are eligible for deduction under section 80B only if you provide agricultural loans to members. But the fact is that that paragraph states that agriculture is not there in that subclause, and it need not be with members. These two aspects are mentioned in that paragraph, but the officer understood it the opposite way and concluded that the court said agricultural loan to members. So you are not providing agricultural loan and you are dealing with non-members, so no deduction. And I had to give a reply qualificating each sentence in that paragraph, stating what is the meaning. And 2 days before, I received the assessment order denying the deduction under section 80B. But the assessing officer withdrawn that paragraph from his order. He excluded that and said he asked for clarification. The clarification provided was not satisfactory, so deduction is denied. So the assessments which are being framed, I almost received 20 assessments till now. Still the deduction is denied, quoting some aspects which are not valid. And I think it is pure contempt of court. Now the reserves and provisions credited to P&L. I have already mentioned about that, why they are mentioning it in the credit side and on the debit side. Now, an issue that came in a recent case in the assessment which is going on is that the assessing officers agreeing that you may add back the portions which are on the debit side, but he won't allow to reduce the portion on the credit side for the reason that for the last year you have not filed the return of income, so it is not added back to the properly. And so for those additions you are not eligible for deduction because it is not an income from members. It is a reserve and it is not an income. So such misinterpretations are happening in the assessments that are going on now also. And the specific subclause. Now in the if you have noticed 2 years before in the ITR for the cooperative society, ITR 5. The deduction we need to mention in respect of ATP. There was only one column for ATP. Now, each clause is mentioned. And if we claim under ATP 2A1, and the assessing officer classifies it as ATP, it is as income from other source, the investment, interest received from investment. Still, if it is received from cooperative societies, we are eligible for deduction under section ATP 2D. But the assessing officer is stating that you have not claimed that in the return. Similarly, I have mentioned about the loss. While filing the return of income, we computed the income and it was loss. There were so many disallowances. Okay, it was added back. There is profit. And we are eligible under section 18. But the officer is taking the stand that you have not claimed it in the return of income. A case like that, loss case was came before Honorable Supreme ICAI question bench. In the case of Koditana Service Cooperative. And the tribunal said they didn't claim because it was loss. If it is profit, during the assessment, the assessor can claim before the assessing officer. So if there is such variations, we have claimed in ATP 2A1, and during the assessment, assessing officer is classifying it as income from other source, and still we are eligible for deduction under section ATP for that income, we have to make that claim before the assessing officer during the assessment. Now, other calls that are being faced now, especially because it is equal settings now, is the bylaws and the audit reports are in Malayalam. Now, just a moment. So the audit of a cooperative society is done by the Department of Corporation, not by a chartered accountant. And as per 44 AB, if the audit of that entity is done under any other law which is prevailing, the auditor, the chartered accountant, the further report from chartered accountant is required. That is in Form 3CA and 3CD. And we need not audit the accounts of the cooperative society because it is already audited and we can rely on that audit report. In some cases, I have seen some of the chartered accountants are filing Form 3CB and 3CB, which means that we are certifying the accounts also. So it's better to issue 3CA relying on the audit report and balance sheet of the department. And various practices are there. Some of the chartered accountants prepare the same financials in our format and we will sign and upload. What I do is that as the audit report signed by an auditor under another act, I rely on that and I scan that report and upload. So those reports are in Malayalam. Also the bylaws are in Malayalam. And the assessing officers are asking to translate it to English and publish. And we are doing the translation and we are filing it. But in 3 or 4 cases, the assessments which are going on now, they are asking to submit the registration certificate in English. So that we have mentioned that it is we can't do that because it is issued by the registrar and it is in Malayalam, and in Kerala the language that should be used by them is Malayalam. So that issue is coming, and for that we can't complain because the officer who is assessing is not from Kerala as it is national e-proceedings. This is being done. Now, filing of return within due date. In the Chirakkal Service Cooperative Bank case, there was another question of law. When a cooperative society has filed the return of income belatedly, whether they are eligible for deduction. The court said that belated filing is not an issue with respect to deduction of Section 80. They can claim deduction. So before the assessment proceedings, the assessee has to file the return of income. And the court also said that what is meant by the assessment proceedings, it also includes the appellate proceedings. Meaning, if a case is pending before the Honorable Supreme Court, and I have not filed the return of income till now, I can treat that appellate proceedings also as an assessment proceedings, and I can file the return of income now, claiming deduction. So there was a case before Honorable ICAI. The name I don't remember. It's a society from Alabama. In that case, the return was not filed, and during the hearing before the ICAI, this return was submitted based on the judgment of Chirakkal Service Cooperative Bank case. And the tribunal accepted the argument and remanded the case back to assessing officer to verify the return and treat it as a valid return. But this belated filing of return has changed now. From the assessment year 1819 onwards, the section 80 AC was amended, stating that only if return is filed within the due date under section 139(1), deduction is eligible. So from assessment year 1819 onwards, if we do not file the return of income within time, you are not eligible for deduction. So that we need to keep in mind. I have received 5 to 6 cases which were filed by someone else, in which the return was filed after date. So the 143(1) intimation came stating that it is not filed within due date, so you are not eligible for deduction. Now, standard of VC and VCB. And the type of society and nature of business that we have to mention in the return. The type of society, there are various types which are mentioned. Cooperative bank is the primary, agricultural credit society is the. To claim the deduction, we need not go to those. We can show it as just a cooperative society. And the nature of business. Till the assessment year 1920 returns, there are no specific activities mentioned for societies. So we are stating finance business. But for the assessment year 2021 onwards, in the return of income, there is an item activities of cooperative societies. We can select that, and then in the next column, which activity, whether it is providing credit facility to members, or marketing, or interest received from other deposits, that activity also mentioned. We can mention. Now, the details called for in the assessments. The primary question in Mavilai case before the High Court was whether the assessing officer has the power to call for details to verify the eligibility. And the Supreme Court said they do not have the power to verify the classification or the status of a cooperative society, but they have the power to verify the quantum. So we have to prove that the loans we have provided is with members. We are engaged in this business. Whatever claim we are stating, we need to prove that. So the invoicers are asking the list of members, the loans, list of loans provided, the list of deposits received, etc. In which I think the list of deposits has nothing to do with ATP because it's only a source of fund for providing credit facility to members. Either I can receive it from my members or as loan from banks. So it has no relevance with respect to ATP. Now the circular 37/2016, I have already explained that enhanced income, it is also eligible for deduction. Circular 18/2015. Section 36(1)(7)(a), that 7.5% of bad debts, the portion for bad debts is eligible as expense. It is not for the cooperative societies, it is only for the cooperative banks. So if the society is a cooperative bank with RBI license, they can claim that deduction, but not for the other cooperative societies. Now, transaction with non-members, can they do that? Yes, they can do, because in Kerala it is permitted under the Act, and if it is permitted under the bylaw of the society also, they can do that. But for that, the deduction won't be available. So the question is whether these societies are engaged in activities with non-members. I could say yes, because they are providing loans to staff. Staff are not members of the society. So the income from the loans provided to staff, it is the income from non-members. So we need to compute that income, and the deduction of section 80B2C, 50,000, we can claim against that. Now sections 269 SS, 269 T, and 269 ST. There's no recent developments still. 269 SS speaks about the deposits or loans accepted. So 20,000 limit is there when accepting deposits or loans, but it is not followed by the societies. They are based on the fact that the section 1 is not applicable when they are collecting from members, as the section speaks that it is by one person from another, and when the society is collecting it from members, for that transactions it is not applicable. For the other, if it is collecting from non-member, it is applicable. Same with 269T, it is the repayment. And 269ST, 269ST applicable for those transactions which are not specified in SS and ST. So it is not applicable for deposits or loans. But if a non-member repays the loan, the 2 lakh limit will be applicable in 269ST. 194A, another area of dispute in case of cooperative societies. So, as per section 194A, subsection 3, clause 5, 194A35, when a cooperative society pays interest to its member, a cooperative society other than cooperative bank, they are not liable to deduct TDS. And when a cooperative society pays interest to another cooperative society, they are not liable to deduct TDS. But with the recent amendment, if the turnover or gross receipts or sales of the society in the preceding year exceeds 50 crores, they are liable to deduct TDS. If the amount exceeds the limit like 40,000, 50,000 case of serious. Similar section was there 194A, 37A for primary agricultural credit societies. If they pay interest to anybody, in 5 it is the society to member. For PSS it is was to anybody. They are they need not deduct TDS. For them also this new amendment will be applicable. So if the gross receipts or the turnover exceeds 50 crores in the preceding year, they are liable to deduct TDS under section 194. To deduct TDS from the payments they made to the customers because they are not engaged in the business of banking, because they do not have RBI license. But when they withdraw fund from district cooperative bank or any other bank, TDS will be deducted, which we can claim as refund by filing the return of income. With this, I think I have covered most of the areas of the provision, the disputes that were prevailing, and the decision of the Honorable Supreme Court. And it was, in fact, the decision from the Supreme Court. I think to know how such a decision we got in a short span of time is also useful. When the decision from the High Court came, the issue was that we need to prove that we are a PSCS, and the assessing officer has to can verify. And all the cases which were pending before tribunal, they are remanded back to the assessing officers. All the cases which were pending before the High Court, those cases were also getting remanded back to the assessing officer to start verifying again in light of the judgment of large numbers. So the procedure came down to the assessing officer. We need to prove before him. And the case appeal was SLP was filed before the Supreme Court. It was admitted, and the stay petition was also filed. Till the decision of Honorable High Court may be stayed, but it was not getting posted. So in order to get it posted, another stay petition was also filed. And then there came Corona, the COVID-19. So it was not getting posted for some time. And then when the stay petition was got posted before the bench, for Chief Justice Honorable Nariman, the court said, okay, it's a fresh petition. Let's issue notice to all afresh. So the counsel for the assessees said, it's only a small matter, so we can hear the matter itself, it need not be the stay petition alone, and it can be done online. And the bench issued notice posting the case itself. And the first hearing, due to unavailability of the advocate, it was not heard. And a detailed argument notes stating the fact that are addressed in the order was furnished before the court, even before starting the hearing. The bench was consisting of Justice Nariman, Chief Justice K.M. Joseph from Kerala, and Justice Bose. And in between, the third member this boss was into another bench and this Naveen came. Still, as the detailed argument note was filed very in earlier stages itself, the court said the counsel need not argue what the portions which were argued before the bench earlier, and they can continue. And the bench has already gone through the argument note in detail. And the primary focus was to get an order stating that the deduction under section 80P is not limited to PSKs. It's a broad section, which was detailedly explained. However, the department were focusing that though the agricultural is not mentioned in ATP 2A1, when we read it, the ATP 4, it's implied. And the power of the assessing officer to verify the details. And the court finally decided in favor of the assessees. And the judgment of Honorable High Court is set aside and ask the High Court to dispose the cases pending before them in light of this judgment. Now, based on Honorable Supreme Court judgment, we have reduction of section ATP from the order of the tribunal, which is tribunal last month, January, February. And the cases before High Court now is pending, and just from Monday there were it was posted, and during the last hearing also, the department their argument is that the assessing officer has to verify afresh, so it need all those cases has to be remanded back for the assessing officer to verify whether the quantum is correct or not. But as I have said, even after this judgment, the assessing officers are denying deduction. So the councils for assessees has furnished a recent assessment order and explained that even after this judgment, assessing officers are filing assessment orders like this. So even if we remand it back, there won't be any change. The final decision has to come from the court. In the meanwhile, I have received so many cases wherein quoting the same aspects, you are dealing with non-nominal members and not agricultural loans, so you are not eligible for reduction of section 80P, and denying the reduction. I received on 4 assessment orders in which assessment order is only 3 pages. As you also stated that you have filed the return of income, you have claimed reduction, I have verified the facts, and I conclude that you are eligible for reduction in light of this judgment. But the computation, they have not entered the reduction, and the demand notice came. So the assessing order states that you are eligible and there is no demand, but there is a demand notice came. In the computation, they have, I don't know why, it's not a one mistake, I have seen it in 4 or 5 cases. And there might be some technical error, and we have filed rectification petition and this will be there. So with this, I conclude my session, and the floor is open for questions.
If anybody has any question, you may please plot it in the question and answer place, the tab which is there. Incidentally, we have one question, Amaljith, so far. The question is from a member. He's asking, can employees cooperative societies avail deduction under section 80P? Employees cooperative societies avail deduction under section 80P.
Yes, they can, because employee cooperative society is a cooperative society registered under the Kerala Cooperative Societies Act. So, as per section 290, it defines it has to be registered. So it is registered. So it is a cooperative society. Now, what is their business? So the eligibility is proved there. What is their business? The quantum of deduction. If they are providing loans, credit facilities to their members, the profit generated out of that is eligible for as deduction. So they are eligible.
Thomas sir, I hope your question has been answered. Thomas K. George sir, I hope your question has been answered. Does anybody else want to ask any questions? Please write to us in the chat box or in the Q&A tab. Chairman, since nobody else is asking, shall we proceed to conclude the session?
Yes, I think we conclude.
Okay.
Does Roy sir have a comment to?
Roy sir, any closing remark?
No comments. I think it's as mentioned by Venu sir. I think this topic we have not so far deliberated in a CPE program. Is a Cooperative Societies Act. I think such kind of topics we should bring. I think for the information of the members, and it's a new information to many. I think basically, I must compliment Amaljith also for the presentation, bringing the Supreme Court decision to the knowledge of all. Though it was given notice to everyone through paper, newspaper, and media and all, but this was a much more clear instruction from Amaljith regarding different issues involved in also the assessment of taxation of cooperative societies. It was nice because I was also dealing in a few cooperative societies, so that I think I can very well say that how far he was able to convey the message to the people that be more vigilant and more cautious in submitting the tax returns for the cooperative societies. It was nice. That's all I want to tell you. That compliments to Ranjit and the chairman, Ranjit and Deva and the entire committee, including me, for the first virtual session today. It's beginning, and we will see a lot more of things. God bless all of us. Thank you. That's it.
Thank you, Roy sir. Chairman, if I may move to proposing the vote of thanks.
Please go ahead. Please.
Yeah. In absentia, first of all, let me thank BCG for his wonderful deliberation on cooperative societies and sharing his experience with us. It's always a pleasure listening to him, and it's always a pleasure being blessed by him. I think we get a lot of positivity when he comes over and blesses all of us. So thank you, BCG. The second person, of course, the speaker for the day, Amaljith. That was a wonderful session. You have really taken us through the complete details, the gamut of details in Section 80P. I really didn't know there was so much into it. It was a really wonderful session. You talked to us in very simple language, explained in very detail, looked at all the case laws. It was a wonderful session. I'm sure we will have you more in our branch to listen to you more again. Thank you, Amaljith. And a big thanks to all the participants for joining us today and making this program a grand success. A big thank you